I'm gonna present on a topic of accounts payable. Is my screen visible?
Yes, it's visible.
Yeah. Okay, guys. Today I'm going to present about the topic of accounts payable. What accounts payable actually is, and why is these accounts payable included in our SAP module and all. So let's understand what this account payable actually is. Accounts payable generally refers to the amount that we owe to our suppliers, which means in every business organization we actually have our stakeholders. Stakeholders refers to the shareholders or the customers or the suppliers or government agencies or the tax authorities, etc. So in these segment of stakeholders, the suppliers concept should be highlighted because suppliers are nothing but the vendors, and these accounts payable is related to these suppliers or also called as vendors. Accounts payable is actually the amount that we are required to pay to our suppliers, which means we generally purchase many products such as raw materials or any other items like spares, tools, machinery, etc. We purchase a lot of items from our suppliers. So we have to pay to those suppliers. It's not like a small amount that we are going to pay it immediately. We may require some time and we owe some amounts to those suppliers. So we have to maintain a record of all those transactions that we are going to take place with our suppliers. So maintaining a record becomes very important. Thus, we create the module of accounts payable and maintain all the records of the transactions that are going to take place in our business transactions or our day-to-day businesses. So let's understand this accounts payable concept. Before going to understand the accounts payable concept, let's understand what is the sublinks or the uh, integration of this GL with all the other modules. See, general ledger. GL refers to general ledger. General ledger is known as the main ledger because it contains all the data related to all the business transactions of any kind of organization. So GL is the main ledger. GL is the one which provides the data to prepare our financial statements. So we take all the information from this GL itself, and this GL contains all the information related to accounts payable, accounts receivable, fixed assets, procurement, payroll, projects, and all other submodules also. So these GL plays the important role. Thus, this GL is considered as the main ledger, and all the other ledgers, see these accounts payable, accounts receivable, all these are considered as subsidiary ledgers because the GL plays the important role, and all these are the subsidiary ledgers which help these GL to maintain the information. So this is the main ledger and all these are subsidiary ledgers. Today our topic of discussion is about a subsidiary ledger which is accounts payable. AP refers to accounts payable. So accounts payable is our topic. What is accounts payable? Let's understand. Accounts payable is actually a component which is used to record and process the business transactions with vendors. To record means we record all the transactions such as the transaction of invoice, and we process, which means we make payments, we clear those invoices, etc. These are the recording and processing of the business transactions with vendors. Vendors is nothing but the suppliers. This is accounts payable. So what is this accounts payable? It is a component which is used to record and process the business transactions with our vendors. It is also referred to as a subsidiary ledger. As we have referred earlier, GL is the main ledger and all these are subsidiary ledgers. Thus AP is also referred to as a subsidiary ledger. When MM is not implemented, it is used for both purchases and also services. Here MM refers to material management. We also have a module called material management in our SAP. If this material management is in place within the organization, then is not placed in the organization, then we use these accounts payable for keeping the data of both purchases and also services. Purchases means the purchases related to raw materials, spares, tools, etc. Services means we can refer to as the legal services such as the services of lawyers, the services of chartered accountants, etc. These are all the services. So why do we have to make the differentiation? There are many terms. Let's take the example of the tax. So on the purchases, we have to pay the purchase tax. On services, we have to pay the service tax. So there are certain differentiations which make us to keep the data of both the modules separately. So when MM is not implemented, we keep the data of both purchases and services in accounts payable. If MM, material management, is implemented within the organization, then we use this only for services. And coming to this, in trail balance, only balances of GL will affect, but not the balances of subsidiary ledgers. Which means in our trail balance, we take the balances. Balances means by the year end, we have certain balances such as assets balance, liabilities balances, etc. So all these balances are taken from the GL account, but not these subsidiary ledgers. We don't consider the balances of these AP, AR, FA, etc. We consider the balances in the GL account itself. So what is the need of these AP, AR, etc.? Let's understand. SAP automatically passes internal entry to sundry creditors reconciliation account, which means SAP automatically passes all the transaction entries to the sundry creditors reconciliation account, and we are not required to pass any entry in the general ledger. It automatically updates the balances. So what is this reconciliation account? Let's know. Reconciliation account. It is generally a control which is maintained in the general ledger. We
Great, madam.
post all the transactions and all the transactions are affected in the subsidiary ledger, that is the accounts payable. Helps to know the total amount of vendors payable by the company at a given period of time. The figure to be represented in the balance sheet is taken from this account. We cannot post directly into these accounts. These are updated automatically. Thus, all the postings made in AP are simultaneously updated in general ledger. Let's understand this line by line. What is a reconciliation account and why do we use this? What actually happens is general ledger contains the record of all the ledgers such as raw materials, sundry creditors, debtors, etc. But general ledger contains only the final balances of these creditors, debtors, etc. So what are the transactions that are taken place day by day or to be recorded in these submodules? Let's say if we are having uh, everyday transaction with the vendors, then we are going to store all those transactions in AP module. and the transaction data is updated in the GL module. How come these transaction data is updated in GL? It is because we also maintain an account called reconciliation account. This reconciliation account is linked between AP and GL, and all the transactions that actually happen in this AP are also updated in the GL account with the help of this reconciliation account. So whenever we post the transactions in AP, they are also updated in the general ledger accounts. This is the actual concept and the linkage between accounts payable and general ledger. So by the year end, we generally come and see the balances in the general ledger, and these are all the balances which are updated with the help of a reconciliation account. That is about the reconciliation account. So it is an account which is maintained in the general ledger, which means it is a general ledger account. It is helpful in updating the balances of the vendors in the general ledger. Post all the transactions affected in the subsidiary ledgers, which means when we post any transaction in our accounts payable, it updates or it gives effect to all those transactions in the general ledger also. Helps to know the total amount of vendors payable by the company at a given period of time, which means we can know what is the balance, what is the amount that is payable to a particular vendor with the help of this reconciliation account. The figure to be represented in the balance sheet is taken from this account. As we have seen earlier, the general ledger maintains the balances. So where come the general ledger extracts those balances? It is from the reconciliation account. This reconciliation account can be maintained either for customers or vendors or assets, etc. But we are speaking about the vendors reconciliation account. So here the sundry creditors balance is taken from this reconciliation account of vendors. We cannot post directly into these accounts. They are updated automatically, which means we don't post in the reconciliation account. We post in the respective vendor master data. But these are updated, which means we can't directly post. They just update simultaneously with the help of the transactions that are made in the accounts payable. Thus, all the postings made in account payable are simultaneously updated in these general ledgers. I hope you are getting my points. There are certain configurations which are required to be made to process our transactions, to process our day-to-day transactions. So these are all, these are some of the configurations which we have to maintain or which we have to configure to post the transactions related to accounts payable. They are creation of vendor account groups, creation of number ranges, assignment of number ranges to those vendor account groups, tolerance groups, creation of reconciliation account, vendor master data, post vendor invoice, vendor outgoing payments and clearings. These are some of the important configurations related to accounts payable. So these are all the T codes that we actually use in case we are not using the path. So these are all the T codes. Let's understand each one separately. First thing is vendor account groups. So what is vendor account groups? Vendor account groups are nothing but the groups which are created based on the similarities, which means let's consider the example of 10 suppliers. Those 10 suppliers are Indian suppliers. Then we can consider them as domestic vendors. So they can be grouped as domestic vendors. If there are 20 suppliers, let's say there are 10 Indian customers and 10 foreign customers, then we can group them as 10 domestic vendors and 10 international vendors. Then all the 10 vendors presenting in this group are considered as domestic vendors. All the 10 suppliers in the foreign group are considered as international vendors. So this is nothing but we are classifying those vendors for our for getting the information such as who are the domestic vendors, who are the international vendors. These can be for many reasons, such as to follow the rules and regulations of the particular countries, to know their taxing procedures, or to make payments, like what is the currency to be involved, etc. These are the various account groups. So, vendors are grouped together based on their similarities. As I have stated earlier, they are grouped according to their similarities. If there are local vendors, referred to as domestic vendors. If there are international vendors, they are referred to as international vendors. If we are going to transact for a single time, then they are referred to as one-time vendors. If the client is of a need that he's gonna keep the vendors based on the type of procurement. Let's say he wants to name the vendors as raw material vendors or the vendors for expenses or legal vendors, then we can name it as per the requirement of the client. Cannot fix a singular set of account groups as they change based on the requirements of the client business. We can't say that these are only the set of vendors which we have to maintain, because every business is different from one another. Every business has different requirements. As per the requirements, it needs to change the account groups. So, as per the client's requirement, we can design the different groups that the client is demanding. So, these can be of any type. Let's say if we are taking the domestic vendors, the client can ask, even in domestic vendors, he needs all these groups, which means raw material, domestic vendors, expenses, domestic vendors, domestic vendor for legal formalities, etc. These are actually based on client's business, and we can't say these are only the single set, which means only these are the vendor groups which are required. We can't say that, because every business has different requirements. So we create these account groups. These are actually the groups created to get the information and to have an easy understanding of what kind of vendors we are dealing with. This was about vendor account groups. So next step is we have to create number ranges. Number ranges are nothing but we actually assign, which means we actually create certain numbers. Let's say in the given example, we are taking the number of 1 lakh to 2,99,999. So if we take these series, we are going to assign these series for a particular vendor group. And after assigning to that vendor group, we can create the vendor from that account group. And all the vendors under the particular account group are given a number which ranges from 1 lakh to 2,99,000. So number ranges are nothing but the different sets which we assign so that we can maintain and track of all the vendors that we have. Different sets of number ranges are created using an alphanumeric key. We have a choice of either taking the alphabet or a numerical or both. So we generally create a key, and this key is given with certain number ranges, and these number ranges are again to those account groups. Unique ranges are created for various sets of account groups. We can't overlap the number ranges. For example, if we give 01 and 01 for both the ranges, then the system gets confused about which number range it has to choose. So these key should be unique, and even the numbers that we allot should not overlap. Because in case of overlapping, we can't give the same number for 2 to 3 vendors. We can give or we can assign the number for only one vendor. In such a case, we must be careful that we do not overlap any of the numbers. This was about number ranges. After creating the vendor account groups, we create these number ranges, and since the system will not know we have created these number ranges for which account groups, we also have to assign these to those account groups. That becomes the next step. This is our next step, that is assigning those number ranges which we created earlier to the vendor account groups which we created in the starting. When we have created those number ranges, we assign them to the vendor account groups. Thus, the numbers are assigned to the vendor masters based on the type of account group and the number ranges that we have configured. Let's understand this with this image. For example, in our business, we have created, which means we have implemented the vendor account groups by the names domestic vendor, foreign vendor, one-time vendor, and legal vendor. These are the 4 account groups that we have created in our business. For these account groups, we have assigned these number ranges. For domestic vendors, we assigned it from 1 lakh to 2 lakh 99. For foreign vendors, 3 lakh to 3 lakh 99. For one-time vendors, 4 to 4 lakh 99. For legal vendors, it is given a certain range. Here, when we create, let's say for example A, the vendor named A. A is a domestic vendor. Then A is given a number based on the range created for this domestic vendor, that is 1 lakh to 2 lakh 99. So 1 lakh being the number, starting number, A will be assigned with 1 lakh. And if he is a foreign vendor, then it takes the range of 3 lakhs to 3 lakh 99. And the respective number is assigned to those vendors. So based on the type of vendor and based on the number range allotted, we can give the numbers for those vendors. These number range can also be a requirement of the client. For example, if the client requires that the vendor groups or the vendors in the organization have to be identified with a particular number, then we can also assign them based on the client's requirements. For example, if we consider Mr. X as one of the vendor of our company, he is a domestic vendor. In such a case, the client business asks us to maintain all the domestic vendors with a number range starting from 4. Then we can create all the domestic vendors a number range starting from 4, which means it can be 4 lakhs or 4,000 anything. But the starting number should be 4 so that we can identify those vendors. So as per the requirements of the client, we can also assign those number ranges. We can also create many other groups. But for example, I have taken the groups such as domestic, foreign, one-time and legal. There are hundreds of groups which we can create as per the requirement of the client. And for every group, we have to assign a particular number range which do not overlap with one another. This was about assigning the number ranges to the vendor groups. So first we have created account groups, then we have created the number ranges, then we have assigned those account groups with the number ranges, which forms a link so that they can be assigned to the vendors. The next thing is creation of tolerance group for vendors. Tolerance is nothing but the limit, or it can be any limit. It can be upper limit, lower limit, anything. Here we are considering these tolerance group for the upper limits, which means the maximum limits. The maximum limits for vendors. Why are vendors required to have a tolerance group? Let us understand. These are the upper limits below which the balance in the vendor accounts or the payment differences are transferred to some revenue account or expense account or remain as a part payment, which means let us understand this by considering one example. Let's say there is Mr. A. Mr. A is one of the vendors of a company. Mr. A is being a vendor, we have to pay him 10,000 rupees because of some of the transactions that we have with Mr. A. These 10,000 rupees we have paid on a particular date. We have to pay on a particular date, but we have paid these 10,000 earlier than the date. So, being happy, this Mr. A has given us some cash discount. Let's say an amount of 500. So, what is the amount payable? 10,000. What is the discount that we receive? 500. So, what is the amount we are required to pay? 9,500. So, we paid 9,500. But in our books, we have the amount to be paid as 10,000 itself. The books don't know that we have received the cash discount. In such a case, we have to mention that it is the amount of cash discount that we have received. So what is the role of tolerance group? Here, tolerance group is the upper limit. For example, the tolerance group we have given an amount of 500 itself. So below 500, all the amounts that we receive are either transferred to revenue or expense, means in form of discounts, or they remain as part payments if they are more than that limits, which means if the amount is below 500, it is transferred as discount. If the amount is more than 500, there may be a case that we have paid only the part of the amount. There is a concept of part payments where we do not make the full payment of the actual transaction. In such a case, we are liable to pay the remaining 500 also. Then they remain as a part payment and remain as a liability. If given discount, then they are transferred to the respective accounts. This was the role of tolerance groups. Then comes we have to create a reconciliation account. No, this is the creation of reconciliation account, which means to link the balance of the accounts payable to the general ledger. We are creating this reconciliation account and we are linking this reconciliation account. We are creating this reconciliation account as a ledger in our general ledger. So we can create it as a general ledger and we have to link it. Reconciliation ledger controls the ledger of all the sub-ledgers, which means this reconciliation is not only for vendors. It can also be used for customers. It can also be used for assets. It is used for many others. So this reconciliation account generally extracts all the data from the subsidiary ledger accounts and updates the data into the general ledger. When items are posted to an account in a subledger, which is accounts payable, the system automatically posts to a corresponding GL account, which is called a reconciliation account. Since this reconciliation account is linked to these subledgers, all the data that we post in subledger, that is the accounts payable, is also simultaneously updated into this reconciliation account, and we can see this balance in our general ledger also. A balance sheet account created under the head current liabilities and provisions. See, this reconciliation account is created for vendors, for customers, for assets. So what is the reconciliation purpose here in our presentation? It is for accounts payable. Accounts payable means vendors. Or vendors are an asset or liability? Liability. So being a liability, we have to create these reconciliation account under the head current liabilities and provisions. Why balance sheet? Because these vendors are a liability and liability is recorded in our balance sheet. For which head we have to consider these current liabilities and provisions, because vendors are the current liabilities for any company. So this reconciliation account is created in the balance sheet under the head current liabilities and provisions. What is the use? It generally updates all the transactions that are posted in our subsidiary ledger into our main ledger, that is the general ledger account. Next step is creation of vendor master records. Master record generally means the records that we maintain for a very long time. And transaction records refers to the data that is required to be maintained day by day. Master records are generally the records that are maintained for if once created, they are maintained for a very long period and they are not created day by day. These are generally the ledgers that are required for the business entity. What is creation of vendor master records? Vendor master records generally means the creation of each and every vendor in our server. It is the data related to each and every vendor, and all the data related to these vendors are stored in form of a master record. See, when we are having a transaction with any of the suppliers, then we have to maintain their records. Why? Because we have to make the payments, we have to make the transactions, we have to give them the purchase orders. Many transaction takes place between a business entity and a vendor. Without having the data about the vendor, how can we trust them? It's not a small deal. We are going to have the transactions for many years. We are going to have them as a suppliers for a very long time. Then in such a case, we have to maintain the details of those vendors. So these are not the vendors that we transact today and leave the another. These are the vendors which we transact every day. Not every day, we can say for as per our requirement. We transact with them for a very longer period. So being our vendors in a long run, we have to maintain their records. So the data related to these vendors are stored in our SAP, and all the aspects related to these vendors which are required in a business perspective are created in our system. So data related to each and every vendor is considered and stored in form of the master record. So what is the type of data that we have to maintain is also to be classified. We can't say we are going to maintain how many sons he has, how many daughters he has. We don't require all such data. We require the official data. So what are the types of data that we maintain in our vendor master record? Let's see. There are three types of data. One is general data, company code data, and purchase data. General data is nothing but the data related to the vendor. If a vendor is a company, then what is the name of the company? What is the address? I mean, where is the address of the company? What is the location? What is the language? Which means, is it our local language or any foreign language or whatever it is? What is the language that the business is transacted? What is the telephone number of the company? This general data actually refers the data which is required for the form of communication and any other uh, like uh, for sending any of the couriers, for any other order sendings, etc. This is the general data. about those vendors. Then comes the company code data. These general data is common for all the people. Like if Mr. X is our vendor, his name remains Mr. X, even he transacts for company code A or company code B. So the general data actually remains same for all the company codes. But when it comes to company code data, it might differ from one company to another company, even though the vendor is same, that is Mr. X. So we can make or we can have this company code data according to the requirements of those company codes. These company codes actually have the data which is related to the reconciliation accounts, payment terms, etc. Payment terms. What is payment terms? Payment terms is nothing but the the dates or the time that we have been given to make our payment to those vendors. Let's say if we have taken or if we have transacted with our vendor XYZ company. If he says we have to pay the amount transacted with him immediately, then it is one type of payment term. If he says we can pay the amounts transacted within a period of 15 days, then that is one transacting term or payment term. Payment term is nothing but the credit period that the vendor allows to a business organization. These are the payment terms. Since we do not make these SAP configurations etc. for a small retail shop etc. We actually maintain these data for very large companies, and we can't keep asking for each and every transaction that when we have to pay, when we have to pay. So we generally keep a certain set of rules or a certain set of configurations that are allowed by our vendors and take them as per the invoice or as per the time allowed by our vendor to the business organization. This is the company code data. Purchase data. Purchase data is generally maintained by the purchase department. Whoever purchases the raw material, or let's say whatever the items ordered, maintains those purchase data. These are the three types of data that are contained in our vendor master records. So we create our vendor, which means we actually create a supplier account. In simple words, if we say, we create a supplier account and maintain the data of all the names, addresses, payment terms, etc. Whatever it is required by the client. So these are the three types of data which are maintained in our vendor master records. Then comes posting the vendor invoice. Before understanding what is posting the vendor invoice, let's understand the actual cycle. So in every organization, we have to first determine what are the requirements. Let's say we consider the raw material. Suppose for example, take tires. We need tires for ours is an automobile company, and we require tires. So we determine our requirements. That is, we first analyze how many number of tires do we need. This is called determining of requirements. Let's say we require 10,000 tires. So these requirements are of 10,000 units. Then we decide what is the mode. Like if we consider transportation, then do we have to transport it by lorry, or do we have to transport it by way of ships or aeroplanes, etc. So we have to determine these source of transportation, and then we have to select the vendor. Who is the vendor? Why are we selecting all these? Because we have certain cost limitation. Everyone has to do these cost related items very keenly, because we do not have enough money. We are actually taking the capital and we have to give certain returns. So we have to use the capital that we receive very carefully. So we have to maintain, or we have to we have to investigate the ways which can reduce our cost. We can't just order those tires by aeroplane when we are having a cheaper source. So we are determining each and every step so that we can minimize our cost. So after determining the requirements, that is 10,000, after determining the source of transportation, that is by roadways, we have to select the vendors. Whom do we select? We don't select the vendor who is going to give us for a higher rate. We actually select those vendors who are going to supply us the raw materials at a cheaper rate. Cheaper rate is not the only criteria. We also consider the quality that he is providing, the support that he gives. If there is any kind of discrepancy or any kind of damage, etc. Based on all those criteria, we select the vendor. After selecting the vendor, we process the PO. PO is nothing but the purchase order. What does this purchase order contain? This purchase order contains what are all our requirements. How does the vendor know what we need? So, to help him to know what we need, we generally prepare a purchase order stating all our requirements. We will send these purchase order to our vendor, and after sending these, we monitor when we are going to receive these items. And after receiving those items at our garage, or we can say at our warehouse, we will receive a goods receipt which is given by those transport agency. And we also receive an invoice, which means these goods receipt is held by this transportation department and this invoice is held by us. It is an evidence which is given by our vendor, so that we can check what are all the items that we received, and we then make a payment. So this is actually the cycle which happens in procurement of any of the raw materials. First we determine our requirements, we select the source, we select those vendors, we process the PO, we monitor the PO, we receive the goods receipt, we receive our invoice, we verify whether all the requirements or all the goods that we have stated in the PO are received or not, and then we process the payment. This is actually the cycle. So what is this invoice becomes the important part here. Invoice is a commercial document, which means a bill in a simple language, issued by a seller to a buyer, which means a vendor gives a buyer the invoice. What does this invoice contain? This invoice contains all the details relating to sale transaction and indicating products, quantities, and agreed upon prices for the products or services the seller had provided to the buyer. Which means what are all the transactions, what are all the agreements taken place between the vendor and the buyer are stated in this invoice. All the vendor invoices has to be posted to the server. This is the step which requires all these details. We have to post the vendor invoice in the server. So these requirements becomes mandatory because we need the data to post the invoice in the server. And after posting the invoice, that is after posting the bill in our server, then we make the payments and clear those invoices. This is the posting of vendor invoice. Coming to the part of payments. After posting the invoice, since we are due and we owe to the vendors, the payment is to be made. And these payment can be of two types. Either we pay the vendor in full amounts, or we can make the part payments. If we have transacted for an amount of, let's say, 10,000, if we pay 10,000, then it is called full payment. If we only pay 5,000 and if we are due with 5,000 amount, then it is referred to as part payment. We can make payment in either of the ways. These part payments can again be divided into partial payments and residual payments. Even though both the payments or part payments itself, they differ in terms of transactions and the processing of those transactions, payment transactions. So these are the two types of payments, payment methods when we are paying to the vendors. This is about the payment to the vendors. So this was my presentation all about. Today we have discussed about accounts payable and the configurations in those accounts payable. That is, what are accounts payable? Accounts payables are nothing but the accounts of the suppliers which we have to pay, which we are due to pay. And to make the accounts or to maintain the accounts of these suppliers, we have to make certain configurations. What are those configurations? We have to create the account groups. Why are account groups created? These are created because we have to group or we have to uh, make together all the vendors which have similarities, which have similar nature. After creating the account groups, we have to maintain the number ranges because we can't keep calling every vendor by name. If we create the number range, we can assign a particular number to a particular vendor. So we create the number ranges. Since the system may not be able to analyze that we have created these number ranges, it's our responsibility that we have to assign these number ranges to the vendor account groups. And to process any of the cash discounts or part payments, the system has to know that these are part payments and these are cash discounts. For that, we have to maintain the tolerance group for the vendors. Since GL is the main ledger and AP is the sub ledger, to maintain a link between these GL master data and accounts payable sub ledger, subsidiary ledger, we actually create an GL account, which is named as reconciliation account for the vendors. What does this reconciliation account do? It actually updates what are all the transactions that we post in our accounts payable to the general ledger and helps to analyze what is the final balance of a particular credit